Hello traders, Gary Wagner here, 11:25 in Honolulu, 4:25 in New York on Monday, 6th day of March 2023, and this is the Daily Report for gold and silver. As expected, market participants are overwhelmingly cautious with a wait-and-see attitude as trading begins in a tepid manner on the first trading day of the week. Tomorrow, Powell will begin a 2-day testimony to the House and Senate. And then, of course, the Labor Department will report the jobs report numbers for February on Friday. Gold futures are down fractionally, approximately 0.1% lower, with the most active April contract currently down $1.90 and fixed at $1,852.60. Gold and the dollar are both trading fractionally lower today, with the dollar down about 24 points or 0.24%, and the dollar index is currently fixed at 104.240. Lastly, silver is off by 0.44% or 9 cents, with the most active March contract currently fixed at $21.14.5. Although gold is only trading fractionally lower when you compare today's close or current pricing to the close on Friday, when you look at the body size of this red candle here, it's easy to see that it is the widest or the largest decline when you compare the open and closing price of a single trading session since this current rally began, which I believe is a counterwave or a B wave to the first corrective wave or A wave that took gold from $1,974 down to a low of approximately $1,810. While our technical studies indicate the potential for resistance at gold's 50-day moving average, which is currently fixed at $1,872, we must acknowledge the fact that the changes we see over the next few days in gold will be directly related to Powell's testimony to the Senate tomorrow and Congress on Wednesday. It is widely anticipated that Powell's speech to the Senate and testimony to Congress will maintain a very hawkish monetary policy stance in which he will state that there are more rate hikes ahead and they will remain elevated for a longer period of time. If that assumption is correct, we could easily see gold trade lower based on a hawkish tone by Chairman Powell on Tuesday and Wednesday. However, it is Friday's jobs report that contains the most uncertainty and the greatest unknown factors. It is currently anticipated that the report will show a reduction from the hot numbers of 517,000 jobs added in January to about 225,000 jobs in February, which means that the wild card is if Friday's report shows a robust number of jobs coming in exceeding the current expectations of 225,000 as we got in January, with an anticipated 180,000 jobs being added and the actual numbers coming in at 517,000. Because if the jobs report actual numbers come in well above current forecasts, we could expect more bearish pressure on gold, as it would firm the resolve of the Federal Reserve to be more aggressive than they currently are. Lastly, I do want to take a look at silver today. We are looking at a standard Japanese candlestick chart of silver futures, and we have a long-term fib retracement from these lows at around $11.60 up to the highs at approximately $30. Last week, we saw gold and silver trade higher, and we saw silver break back above the 50% retracement. I am using this particular price point, meaning $21, as a line in the sand that silver must hold to confirm that this price drop from approximately $25 to $21 was in fact a correction, and the precursor needed to say that silver has finished this correction and will return to a bullish demeanor. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.